Good evening, friends. Welcome to my channel. Friends, quite an eventful day. So, and what would have happened today? There would be many people who would be taking calls here and then keeping on averaging here. There would be many who would be taking a put at this position and keeping on averaging. Again, there will be many who will be taking a call here and then again averaging. So, there would be many people who would have gone into losses, and there would be many people who would be into profits also. So, for the people who had gone into losses, gentlemen, there is always, gentlemen and lady, there is always the next day. And for those in profits, let's be humble. The market has given you today, and let's thank the market for it. Friends, as I say that, I shall always, I committed to show my P&L. So here is my P&L for today. And friends, so I made a 5.78 lakhs. Some positions I've carried forward for a decay for tomorrow, but that's okay. Now, friends, we had a live session today, and people who joined the live session had a very nice trading day. But bygones are bygones. Let's look into what can happen tomorrow. So, friends, before going into that, let me show you what the market is doing. What is happening in the market is called a volatility compression. Let me explain how it is happening, and for that, I will take you to my Excel sheet. Forget all this data. I mean, I go into detail into the data. So let's see. Now, as of today, if you see here, friends, the FIs have gone further bearish. Pros have maintained their bearishness, and DI have maintained their bearishness. So FIs have gone further bearish compared to what had happened. What was their position on before Thursday? So they have gone 46,519 contracts more bearish. The pros have more or less maintained their bearish levels. And to whom have they supplied? The FIs, they supplied to the retailers. So this is what my conclusion is, that they are bearish, pros are bearish. So overall, my thought process would also be in the bearish direction. Now, friends, I have plotted the high and the low of each and every candle from the 14th till the 22nd. And what you see in your eyes is, on the chart, you will see a candle like this. But what I see here is the high to low has been continuously compressed. If you see 320 to 190, the upper wick, if you see the upper wick, that wick has increased. The upper wick is showing an increase, which means every time the upper wick is higher than the previous candle, and that is an implication that the compression is happening from the top. The lower wick has also increased. That means the whole body of the candle, if you see the body of the candle, this particular body, the body was 232 on the 14th, to 232 points. Then came 169, then 266, 82, 46, 48, and now today the body is only 20 points. Now, friends, if you see a spring, what happens? When you start compressing a spring, it is a spring like this, normal. So that's my first candle string. Then it gets further compressed, then it gets further compressed. Now, friends, what happens when the spring is left open? It will bounce back. It will bounce back in a very vigorous way. Now, if you see, then I will take you to the chart. I'll take you to the one-day chart. Let me show you the one-day chart. Here, let me show you the one-day chart. Reset the chart. Now I'll increase this a bit, and this is a reflection of the volatility compression. Okay. So it's coming down and it's forming a triangle. Now, friends, as you know, my Guruji has given a view, and normally his view is out of 100 times, it is 99 times correct, no, 99.99 times correct. Now, what he has said is that we may, on a weekly basis, it is expected that we will form a red candle, which means that the market has to close below the previous closing, which is 17,530. Now, let's get back to the daily candle. And if you see on the daily candle, and I go to a line chart, and then this I'll delete and draw it for you again. Now on the bottom of, you see the 16th September, this is the support bottom. So what I'll do is I'll draw a support bottom. So the market should have taken a support from this particular line today. Let's see whether it has done or not on the candle chart pattern. Yes, it has done. Now that's something which is really interesting to observe. Again, I go back to this line pattern. Now, if you see, either it can form a W like this, it can form a W and go up like this, which the data is not suggesting. So I will rule out this option. The data is suggesting completely bearish data. If you see the data here, again, it is suggesting a bearish data. So since the data is not suggesting a bullish data, and therefore I would not be much focused on getting the W formation here. Then what can happen? It can then come down up to here, come down below, and remain here. So it will leave us guessing what's going to happen tomorrow. Or it can form a N pattern. Now, when an N pattern is formed, this particular length and would be equal to this particular length. And this is coming to around 17,240. So I'm not expecting it to go down up to that level tomorrow, but definitely tomorrow there is some other level that I have in mind. Now let's look into how we shall trade tomorrow. So my view for tomorrow is bearish, and therefore my trade and my setup that I'll take, the trade that I'll take, I'll be on the bearish setup mode. Okay. As I said, I'm neither bullish nor bearish. If the setup gives me a bearish, I will take a bearish. But if the setup gives me bullish, I'll go bullish, but only with 30% quantity. Now, friends, this is the chart that I've drawn and the lines that I've drawn. The long-term trend line on a daily basis, and this is the one. So, friends, from in between this triangle, tomorrow in between this triangle, for me, it is a no trading zone. It's a no trading zone for me. If the market is in between this, it's not trading zone. If it is coming near this, near this trend line with a 10-point SL, I will go bearish. That means I will go short. If it is coming here, then this is a support line with here I'll see, sorry, if it is coming here, anywhere it opens, it's coming here, then I will see that whether it is coming and touching this point, which is 17,530, 17,532. If it is coming and touching this point and reversing back, that means it is taking a support from here. That means it's taking support from it. So in that case, I will allow it to come, take a support and go back inside this channel. If it goes back and a 5-minute candle is formed here on the upside, I will take a call. I will go bullish. I'll take a call and I'll wait for it to touch this candle, touch this line. Okay. Now, what happens if it opens gap up? If it opens above this, if it opens gap up, then the scenario is that this trend line would be my support point, and I will also draw this particular line, which is here. So at the gap up, if it is opening gap up and I'm taking a trade, then my SL will be this line, which is 17,641. This should not be major gap up that opens. If it's more than 100 points, then obviously I'm going to follow my trading in gap up rule. Now, if it opens gap down, below this particular trend line, which is around, or even below this 17,534, then friends, with 17,534 as an SL, or rather, I will say that with this trend line as an SL, I will take a put. My first target would be 17,430 here. And what is my second target? My second target, I don't see much on the screen. So let me go to a 15-minute chart and see. There, yes. So I see one more gap, and that is 17,401. The second target will be on the downside will be 17,401, and my third target will be again here, which is 17,378. Below this, I'm not interested in trading anymore. Okay. That's all from my side, friends. Friends, every day I'm giving you the Excel sheet of the FI Pro data. If you want the Excel sheet, please join my Telegram channel, the link of which is given in the description box. That's all from my side, friends. Thank you very much. Sayonara. Cheers. Bye-bye.